Hello, Oracles. My goodness, it is good to be back here in 2024, finally making a good comeback for you guys. So, today I'm just going to kind of go over what I've been doing for the last 6 months. And thank you to all of you who reached out to make sure I was doing okay, make sure there was nothing wrong. So, I'm going to kind of run you guys through what I was doing the last 6 months, kind of give you my thoughts as to what I think we are going to be seeing here in 2024 and beyond for the market and for everything in the economy altogether. So I'm going to share all those thoughts. I'm also going to share some of what I think is going on with Tesla stock. And ironically, I looked at it today. From the time that I made my last recording until now, the stock is the same price. Obviously, some things happened between then and now. However, the stock price itself has not moved. Now, if you guys remember back then, that's basically what I thought was going to happen, and we were going to basically be trading sideways. For swing traders or anybody who's playing options, it's actually pretty perfect for you guys. You guys can make some good money with this. For those of you guys who are just kind of accumulating and holding, hey, buy on some of the dips, let it ride through the highs. I'll share with you guys what I did as well, but I just want to kind of break it down for you guys where I'm at. My plan going forward is I'm going to try to be able to get out to you guys a weekly video, just kind of as I update. And again, you'll understand why shortly when I explain what's going on in my life. But I want to try to get you guys, just get my thoughts out to you guys on a weekly basis. If I can do more, I will. But as of right now, that's what my goals are. All right, so first things first, what happened with me? My job ended up moving me. So I ended up having to move from one town to another. Just my whole life got screwed up there because my commute went from 6 minutes up to 45 minutes. Really kind of put a damper on the timing of everything, kind of had to refigure out life, trying to find a new place to live, found a new place to live. And then my landlord a month later decided that she wanted to sell the place. So then I had to go find another place to live. As I was looking for another place to live, I realized that rents were just going up and up and up. And I wasn't going to put myself into a junky area just to keep my rent low. And so I was like, you know what? I knew the housing market was hot, but I'm like, let me just see in the new area that I'm in. Let me take a look and see what we're looking at for some mortgage rates and housing prices. Quite honestly, the housing prices weren't all that bad in the area that I was looking at where I was living. So I'm like, hey, this might not be a bad option. Happen to reach out, and because of the December FOMC meeting, with the excitement of a potential Fed rate cut, the interest rates dropped on that news. So I ended up getting myself in at a mortgage on that dip. I had a feeling that that was just talk and we weren't actually going to be seeing the rates coming down. So we would end up seeing it push back up again. So I caught mortgage rates on the dip and got myself in at 6.5%. Still relatively high, especially considering what we saw a couple of years ago. But considering the price that I got the house at and the fact that I got in at 6.5%, plus the fact that I'm going to be able to rent out this house, or at least a portion of it for a good chunk of the mortgage, then to me, it was a win-win situation. So I decided to buy instead of rent. Now, I've been planning this out for the last 5+ years, so I was pretty ready for all of that. I had money for the down payment and everything. As you guys know, I had money in CDs that I've been rolling over month to month in anticipation of this. So I took advantage of that and I bought the house. So of course, then from buying the house at the end of January until now, I've just been renovating and getting it up to date. So within a month, I've been doing pretty well getting it up there. And now here I am back in the studio. Still have quite a bit to do on the house. I want to try to get it on the market to rent by July. My house is set up. I have a main house in the front, which is 3-bed, 1.5 bath. And then an addition in the back, which is 1 bed and 1 bath with a bonus room in the middle. So I'm going to kind of put a kitchenette in there as well. But I'm going to live in the back half and I'm going to rent out the front half. That is the current plan as of right now. So that there's going to be a huge investment. So I took my $20,000 in CDs that were bringing in about 5.5%, or about $120 to $150 every single month. And I'm now rolling that into a mortgage, which is potentially going to be getting me $2,000 every single month. So pretty significant upgrade, about a 10x on that monthly income. So I'm pretty happy about that. Obviously, need to make sure I can get renters in here, but I'm working with a property manager to make that happen. So with that change there, I also started looking more into the passive income. So I still love Tesla stock, but I did sell some of mine off. As we got those spikes around that 260 level, I did trim a little bit there, put it into some passive income. Because my life has been so busy, I haven't had the time to really dive in and take a look and see, hey, trying to time the market. Historically, timing the market sucks. You can be really lucky at it, or every once in a while you do well. But historically, when you look at the market itself and people who try to time the market, you're going to fail more often than not. So when it comes to Tesla stock, I still love the stock long term. I still will be adding shares to it. But in the meantime, because I felt like we were going to be trading sideways for quite a while, at least until the Fed starts to drop interest rates, I think there's going to be plenty of buying time. So, as I told you guys last year, my plan was to be adding more passive income coming in to get that cash flow generation so that I could actually add more shares. Previous videos, I did the math on that, explaining to you guys how that was going to work because I can only trade so much time for money for that active income to be able to put into Tesla. And nobody knows when for sure that's actually going to take off and bring any income in for me. Plus, in order for me to do that, I would either have to do options, which I don't do currently because I don't have enough money to buy 100 shares of the stock. I would either have to, get dividends from Tesla stock, which we know they're not going to do at least anytime soon. I'm guessing maybe 2030 at the earliest. So for me, I would either just be adding to the shares and I wouldn't have any passive income, and that would kind of minimize how much I could actually add to the stock. So by having more of my active income put into dividend plays and stuff that's going to generate income for me, I would in turn have more money to be able to invest in Tesla stock later. That is still my intention. In the meantime, trimming some of that off so that I can add more to those income plays made sense to me. And of course, as I am editing, I realized that I just said I'm not going to be timing the market. And then I said how I'm going to be timing the purchase of Tesla stock. So one of those things about, hey, a little rusty coming back. But I just wanted to clarify, I'm not trying to time the market at all. I'm just trying to build a stronger foundation of cash flow for myself to be able to take advantage of any opportunities I see going forward, which are natural to happen in the market as it is. Warren Buffett doesn't try to time the market, but he recognizes when stocks and companies are undervalued and uses those times to purchase them. But he doesn't try to time it. He just recognizes those times. And those times happen frequently. That's all I'm trying to do is not time the market, just recognize that we are at a very hot point in the market right now, and we are due for a cool off, and I'm just waiting for that cool off to happen. So that's where I'm at, and I'll share with you guys my portfolio. And thank you to all of my members and patrons. Patrons, I've been sharing with you guys, though not as much information, but I have a whole brand new spreadsheet. My financial tracker is all inclusive now. It's all in one place where I can track everything all at once. And I'm going to be able to get it to a point where I can share it with you guys and you can use it for yourselves as well. So I'll get that over to you guys as soon as I can. Again, still working on just trying to get mine all together. So until then, I'll be able to just share with you guys what I'm doing and you can see what I'm doing on my spreadsheets. But for me, I've also looked at those high yield income plays that I had from last year, the Yield Max ETFs. I still think that they're a good play, but there's so much capital erosion that comes out of them that in the long term, you end up losing money. As a matter of fact, TSLY, because of the time that I had purchased it, I'm actually upside down on that, despite the fact that it yields 50 to 60%. So if I have something that's going to be yielding 50 to 60%, I would expect to be having, a net total return of at least 50 or 60%. And I'm not even positive on it. So I trimmed some of that position as well. And I'm kind of utilizing those to bring in some income to be able to feed all of my other stocks. And again, I'll share that with you guys at some point. Just with my current setup right now, not going to be able to share anything. I just wanted to give you guys an update on stuff, but I will share that spreadsheet with you as soon as I get an opportunity to do that. But in the meantime, my portfolio is currently generating just under $500 every single month in passive income from dividends. And I also have money that comes out going in for my mortgage. I use SoFi and I love it because they've got vaults in there. And so every single week when I get paid, I have money gets put into each specific vault. I have one for my mortgage. I have one I just signed up for some windows because I got to get new windows for the house. So for the payments on that, I have that going into the vault. I have money that's going to the vault for an emergency fund, for my son's college fund, for a travel fund. And so all of that goes into these vaults in savings, and it's a 4.6% yield that I'm getting on that high yield savings account in my SoFi account. So last month I checked it, and because of my mortgage being about $2,000 for the month, I actually made $7 in interest on that $2,000 that I had sitting in there getting ready to pay my mortgage. So I'm actually making money on the money that I have to use to pay my mortgage. Pretty brilliant on my end, I thought. So I was pretty happy about that. And so I've got SoFi, which is really nice. So all that high yield savings, I have some interest coming in from there as well on a monthly basis. So right now, that is my focus, which is getting money coming in. And I actually stopped putting money into my stock portfolio because I needed to pay the mortgage, pay some of these bills that I have, just, new home ownership stuff that I've got to put money into the house. So I cut back on my investing. I put in $25 every single week right now. And as soon as I get tenants in here, I will be able to increase my emergency fund because I want to make sure I have that. I'll be able to put money towards the mortgage a little bit more. And then I'm going to take money, I'm going to be able to put that money into the stock market as well. So here's my thoughts for what I think is going to happen in the market over the next year. Now, Adam and I had discussed this almost a year ago. We did a video together discussing what happens when the Fed is raising interest rates, when the Fed pivots, and how the market has responded. Well, right now we're seeing everything playing out exactly as we had discussed. When the Fed pauses, we see the market running to all-time highs. It's literally where we're at right now. Then we end up seeing the Fed cut rates and the market ends up pulling back and we get into a recession, and that ends up bringing the market down significantly. So a lot of people are saying, oh, we're not going to get a recession, this and that. Look, I know that history doesn't always repeat itself, but it often rhymes. And it's not that the Fed pivoting is going to be causing this recession that's coming in, but when the Fed raises rates, they raise rates to slow the economy down. That there in itself could lead to a recession. Not that they want to cause that. That's what they're trying to prevent. They're trying to get themselves to that soft landing where we don't have a recession. But there's so much lagging information and data that they use that they typically end up getting us into a recession. And by the time they actually announce that we are in a recession, we're already past it and we're starting to come out of it. So when you start to look at the data, you end up seeing that we are already coming down and something is going on in the economy that is causing the market to pull back significantly. And then the Fed will pivot and they'll start cutting rates. That re-stimulates the economy. And then we finally come down to a bottom and start to pull out after that. I still think that is what is going to play out. It's just a matter of when is that going to end up happening. So there's been a lot of discussion about commercial real estate being that trigger that's kind of caused the entire market and the entire economy to pull down. So what's happening is between now and 2026, there's a lot of loans that are coming due for a lot of commercial real estate. Now, it's usually 3 to 5 years that these end up rolling over. And over the last 3 to 5 years, we had 0% interest rates to now the highest interest rates we've seen in the last 20 years, pushing up to 7+%. So what's going to end up happening is a lot of these loans coming due, these commercial real estate owners aren't going to be able to pay off those loans. That's going to end up being a problem. So some of these are going to go into default. And then what ends up happening is we end up having these major issues going on there. Then if we start getting into a recession, then people start losing their jobs. Now people can't pay rent, which is going to cause more of that domino effect to end up happening. So the commercial real estate owners who were able to pay these loans off now all of a sudden have less tenants. They have less income coming in for themselves. Now they start not being able to pay off their loans as well. This spiral kind of continues till we finally hit a bottom. When that trigger is going to start happening, I think it's already started as we've been seeing it, but I don't really know when it's going to hit that hard point. But I think it's going to look similar to what we saw back in 2008 when we saw that housing crisis back then. But this is going to be on a commercial level versus a residential level. So how bad the impact is going to be, I don't know. Obviously, the Fed has the ability to come down on rates. And I think this might be part of the reason why it's such a balancing act for them, because if they come down on rates now, and then the housing market crashes for commercial real estate, they don't have any further to drop the rates to stimulate the economy. So they kind of use the higher rates as that buffer to stimulate as things happen. So they're trying to balance this very carefully. And there's so many moving factors. I don't think that they're going to be able to navigate this perfectly. I think they've done a decent job, but I think they've done such stuff on lagging information. It's almost impossible for them to make this actually happen. Now, they don't make any decisions as far as political information goes. They keep that out entirely. But now here we are coming into a point where we are seeing a presidential election coming up. Historically, even in 2008, when we had that election, it was right around that May timeframe that we started to see the massive pullback begin. We saw the bottom of that come in October because you have all that volatility going into the presidential election of who's going to win, what decisions are we going to make. People kind of pull their money out And when you have less volume in the market, it becomes more volatile. And when people are selling off, it causes it to sell off even faster. And because of the fact that we don't know what's going to be going on, whichever party's going to win is going to end up deciding, kind of what stocks are going to get favored going forward. And that's how big money looks at it. So when you end up having that going on towards presidential election time with a lot of this negative stuff going on in the economy with commercial real estate, it's kind of a recipe for disaster. So we could see a massive pullback in the market starting maybe around the May timeframe and probably bottoming around October. Now, it's not going to be a straight down line. There's going to be some ups and downs along the way, but I think we may see like a market-wide dead cat bounce going from May to October and then start to kind of pull out of it from there. I think at that point, we're going to start seeing the Fed starting to recognize the commercial real estate and maybe do a 25 basis point cut in like the June, July timeframe, but it's going to be slow. And then they may speed that up post-election as we start to see that the economy really needs more stimulation. That's kind of where I'm looking at it from right now. So going back to what I am doing with my portfolio and why I'm doing it is that cash flow generation and having cash on hand will allow me to take advantage of this big dip in the market that I potentially see coming. So while I do think Tesla is going to be perfectly fine, I do think the entire market pulling back is going to cause Tesla to pull back as well, thereby giving me even better buying opportunities. So I could take the cash flow I have coming in from my real estate and from my dividends to be able to put into Tesla stock. Because I think once we come out of it, obviously with the interest rates coming down, that's going to help Tesla and the entire automotive industry as well. Tesla has been burying competition by dropping prices. And Gary Black is out there discussing how it's kind of hurting the entire EV market. And it is, I think, because Tesla, has said themselves that competition is actually a good thing for the entire automotive industry for EVs, because you want more players out there to get that knowledge out. Tesla also should be doing some advertising themselves when it comes to that. And they're not. So they do a little bit of it, but I think they'd be doing a lot more, at least as far as educating the public as to what EVs really have to offer. So we could see that over the next 6 to 12 months. And so in that meantime, I can add more shares as we hit those lows. So I'm just being very patient with all of this. And I don't know what price we're going to come down to. I know that we still have those gaps down to 146 for Tesla. You can go down to 114 if you want to talk about those lower gaps. So many people are like, it's never going to come down that low. I don't know. Nobody knows what the future is going to hold. I just know that by having cash flow generation coming in, it allows me to be a versatile investor, and I can be agile when it comes to, hey, there's opportunities here. I have cash to do it, and I don't need to sell something else in order to be able to buy things that I like. So if I've got cash flow coming in and Tesla makes a big dip somewhere, cool. I have cash flow. I can buy more shares. That's my strategy for the next 6 to 12 months. Obviously, things change regularly, but again, having that cash flow allows me to adjust on the fly. Now, I am still going to be adding to all of my other dividend positions, because when it comes down to it in the long run, I want to have passive income coming in where I don't need to think about anything at all. And I could just have this cash flow and do it. I don't need to sell shares. I don't need to play options. None of that. I just have the dividend cash coming in and good. And the dividend cash coming in that I've played has, dividend growth rates of, 5, 10, 15%. That's basically like me getting a 5, 10, or 15% raise every single year on these positions. I don't know about you, but does your job give you a 5, 10, or 15% raise? It's pretty awesome. So I'm trading my active income for that passive income to give me the freedom of lifestyle that I want. And obviously the real estate is going to help with that as well. And I'm going to utilize that to buy more properties in the future also. So that's all I've got for you guys today. Thank you so much for checking in on me. I appreciate all of you guys. And again, I'm going to try to get these out here. Once I can, I'll get some more of these visuals up for you, and I'll be able to get my entire spreadsheet and portfolio up to show you guys where I'm at with everything, all the different stocks that I've been purchasing, all the ETFs I've got. So otherwise, any other questions you guys have, please shoot them in the comments down below. Thank you so much for watching. I appreciate all of your support. Have a great one.